Hey folks, it's Vic Noble here with your weekly trade example for the week ending December 13th of 2013. And today I want to just go through a top-down analysis with you that leads to a trade, because you know there's a process here of watching levels get hit, seeing what the reaction is, and then seeing if there's a way that you can take advantage of the trade. So this is a weekly chart of the euro yen pair. You know, these higher time frames are really good to look at. And lately in the Coach's Corner, what we've been doing is going through the exercise of marking our charts with key levels, and I go through exactly how we do that. There's a really good way to do that, by the way, that works out super good. But anyway, and then what we're doing is observing. Okay, and this is all ahead of time too, not after the fact. Okay, I want you guys to watch these levels for the next Coach's Corner session. We're going to look and see how we could have made trades around these levels, and it's very effective. So that's the weekly chart. This was an expected level of resistance, 142.42, and these are zones, by the way, that you can have, especially on a weekly chart. You could have quite a bit of discretion in where that stops. On the daily chart, what happens is price comes up to this level in here, and this is so far the reaction. We're at a resistance level and we're getting a negative reaction. And on the 4-hour chart, this is that level that we saw on the weekly chart, and look at this candlestick reaction. Like, we went up to it, and today's been pretty negative. On the 1-hour chart, see, we're just breaking it down now. We're watching, okay, candlesticks negative on the 4-hour chart at expected resistance. The 1-hour chart now comes up here. This is actually set up beautifully, because the thing is, when you get down to the smaller time frames, now you can get zeroed in on the exact pattern for a day trade. Okay, because I'm talking about day trading here, not a longer term position. This was a pattern number 3 up in here, and this little consolidation, you can see the little doji candle here. This is all set up a Noble entry to sell. Okay, it was actually very good, and so you could have got short way up in here at this 142.78 level is actually where it ended up at. You know, the high here is at 81, so you could do this trade with a 10 pip risk. We do this quite often. You can do this with really small risk, and look at this move. I mean, it's been incredible. Now, what if you didn't get this? Well, you can continue to watch the price action, and what it did then is the price started to head down, and these are levels I just have marked on my daily chart, or my 1-hour chart. Bounced off this old level of resistance, now support. See this? But I'm looking at this. You should be looking for a sell at this kind of action, because that's what the, let's go back to the 4-hour chart. That's what the candles are telling you. It's negative. And this is what the pattern is telling us. It's negative. This is pattern number 6. Some people know it as the Vic trade. This is a pattern number 6 sell, and it came rallying back up into here, which set up really well. Pattern number 6. And in fact, if I go to my 15-minute chart, I'll show you here. It came up to this level right here. And when it did that, it was actually actually ended up being our pattern number 6 sell. It was also a pattern number 1, which is overlapping Fibonacci's, and it was also a 15-minute slingshot sell, all coinciding at this level right here, which we saw on the higher time frames. And so you got 142.40-ish area, and a heck of a nice drop. But the point I'm making here is that everything was set up by observing action on the higher time frames. Let me show you one other thing that was happening. This is actually a pattern number 5, which is MACD divergence. These are just all these pattern numbers are just a name that we've given them. See, the price is going higher here. Look what the MACD is doing. It's going lower. And where is this? It's at expected resistance on the higher time frame. That's where we want to see MACD divergence set up in a negative way. Okay, so by observing all of these levels and the reaction at them, and then waiting for a pattern to set up, that's how you can sniff out trades. And again, that's exactly the kind of exercise that I'm really enjoying it. We're going through it now in the Coach's Corner. It's really good. It's I think it's really effective in at least helping people understand how to actually use these levels to make trades from. So anyway, I'll leave it at that. Just a short one here today, and I hope that helps. Keep an eye on your higher time frames. Watch the candlestick reactions at them, and then see if you have a reason. You know, look for a tradable pattern, something that tilts the odds in your favor to get in on the move. Okay, you guys have a great weekend, great week ahead, and I will see you next week with another weekly trade example. Thanks so much.